straight into it. Leanne, your thoughts on the session today?
James, look, as you mentioned, a pretty flat session in the end. It's down 0.1%, although it did seem like we managed to turn around. This morning we opened in pretty negative territory following those leads from the US and European markets. But it does seem like investors have shrugged off a lot of those concerns overseas, particularly around the geopolitical tensions. And we did manage to end relatively flat, which was nice to see. Volume still very, very low today, only about $3 billion going through. And I do think this reflects still a bit of caution ahead of earnings results, which have obviously kicked off this week, and of course a lot of data that is coming out this week from the US as well as China. So I do think investors probably sitting on the sidelines a little bit ahead of a lot of the week's events. But looking at today, the best performers really being that materials sector, up 0.3%. We saw iron ore as well as spot gold up overnight, so we really did see a strong performance in a lot of those iron ore and gold players. Information technology was another strong performer. The worst performers being that utility sector, telecommunications as well as financials, but overall a pretty flat day ahead of a lot of the week's events.
And where did Leighton's today fit with your own expectations and indeed the market expectations? In the end, I see the stock closing down about 2.4%.
James, it was a little bit disappointing in the end, and certainly investors reacting to a bit of this negative news that came out in terms of their first half net profits, which were in fact down 20%. However, they were in fact a little ahead of expectations, so they came in at $291 million. The expectation was around $271 million, but despite that, we did still see investors reacting negatively, and of course that was a result of some of those write-downs across their property space, and some also restructuring costs as well. I think there's also still a little bit of concern around their balance sheet. We know that has been coming under pressure. Net debt is at around $1.2 billion versus about $404 million in December, and gearing is also quite high at about 37% versus about 29% in December. So I certainly think there is still a little bit of concern around there, and I think that's the reason why we certainly did see a bit of a negative performance today. But I don't think it was all too bad having a look at the numbers. So their underlying net profits, excluding some of those one-off items, were in fact up about 25%. We saw revenues up about 5%, and that interim dividend was quite strong, up about 27% as well. And of course they also reaffirmed some of their FY15 outlook and some of that guidance. They have quite a strong pipeline in place in terms of some of this infrastructure spend that is coming on board. So I don't think it was all sort of bad. As I mentioned, I think in the short term certainly a bit of cautiousness around sort of concerns in their balance sheet and some of those costs that have come through. But I certainly think long term Leighton is probably well positioned sort of for that infrastructure spend to come through.